All right, in this video today, I want to talk about, as long as you have a laptop, a PC or desktop environment or setup, one that is fairly reasonable and meets the requirements, you can definitely trade the Emini futures. All right, I primarily like to trade the NASDAQ futures or the ES, which I haven't traded in a while. I do have the charts up on my chart. But you can do this right from your own home environment. Okay, now I do recommend finding a space closed off in your home to where you have some quietness. And why? Because so you are able to think. Okay, you have to really focus 100% on these charts and know what you're looking at. So today I want to show you just a simple strategy for all those out there kind of searching into the new year, looking for something in which they can probably make some extra income, whether part-time or full-time. And maybe you have a goal of making like, let's say $500 a day. Okay, so it's pretty simple to do. We'll do the quick math on that right quick. If we're trading the E-mini futures, how many points does that mean that we need to make a minimum of $500 a day? That's going to be roughly 25 points. Okay, so 25 points is 100 ticks in the market on the NASDAQ. Now, a lot of you that may come from different worlds of trading different markets may think that's a lot of points. How is that possible? Well, the NASDAQ moves a lot, first and foremost, and provides lots of opportunities. But I like to try to trade and get in one and done type setups, no more than 2 trades, because the more that you spend time in the markets and engaging in the markets and leveraging your own capital in the markets, you're probably going to get stopped out at some point. So, if you take one trade and you're solid and you make money on the day, even if you didn't make your $500+ a day, then go ahead and close shop. All right, unless you want to, find a nice, real good setup that you can scalp real quick to make a couple $100 more, $200 more, then that's fine also as well. But when it comes to like the NASDAQ futures, for example, or any particular E-mini futures contract, especially you want to do the math. Okay, so if we do the math on the NASDAQ, for example, the tick value is $5 a tick. Okay, so if I go in and try to get my one and done setup, that's 25 on 25 points times 4 ticks in every point. Yes, there's 4 ticks in every point. Every point is worth $20. Okay, so think about it like that. So and this is traded with one contract. Okay, you don't need to go in and overdo it, trade in 2, 3, 4, 5 contracts. Try to keep it simple, okay? Especially anyone out there that is really limited to the amount of capital. So this is 100 ticks or 25 points times $5. That's the tick value. That's going to give you that $500 on one contract. Okay, trade in 2 contracts, then of course that's going to give you $1,000 a day. All right, so I'm not saying to overdo it. Just keep things simple. If you make your capital or you make your profit for the day, then go ahead and close shop. As long as you can consistently do that each and every day, you'll start to see your small account grow fairly quickly over time. Now, those that are really limited to the amount of capital that you actually have, or even trading a prop firm, maybe switch over to the micros. Now, I'm not saying you're going to make the $500 a day. You could possibly can, but you're going to need to trade multiple micro contracts. All right. So, but again, this video is to those that are interested in, who are trading the NASDAQ E-mini futures. Okay. And trying to accomplish a goal of making $500 a day. So let's jump into it right quick. But before we do, I want to show you the guys this right quick, because I didn't mention this to all my Discord members, to all those that are part of the Discord community. The Discord is free for anyone who's interested in joining. This is a quick trade that I took today that I will be breaking down to all my elite members. Okay, for those who are elite channel supporters, this trade will be broken down today and posted to that private community. If you're interested in gaining access to all the trade breakdowns, to where I go into great depth and talk in detail about the strategy and how I take these trade setups and what I'm looking for surrounding the strategy, all surrounding supply and demand, because that's what I'm trading, you may want to join. It's up to you or not. And become an elite channel supporter. The link to do so is right down in the description portion of the video. Basically, you support my efforts as a content creator and a trader, because that's what I am. But what I do is give back in regards to perks and rewards for joining that program, and it's all through the YouTube tier membership program. It's only $6.99 a month. I'm not here to try to overcharge or beat anyone out of their pockets or anything. It's very inexpensive. It's just my way of providing valuable content and information surrounding the strategy. And if you follow the setup and you follow the strategy, you're probably going to definitely find success. We've had many traders that have found success in doing so. So again, the link is down in the description portion of the video. This is the trade that I took, or one of the trades I took today, and I will be breaking this one down here on the to the elite channel supporters. But that's what you get to get the trade breakdowns, the video playlist, and a great video that I covered on market structure. So again, I will be covering this trade setup to all the elite channel supporters. The link is down in the description portion of the video. Now, let's move into the video for today, which is showing you the setup, or we're talking about both a demand and supply setup, okay? This one being a demand setup. Now, what you want to first and foremost is be able to understand and to determine, I have a bias of the direction of the market. Now, the way that I always talk about, if we're coming from the downside and we are, making lower lows and lower highs, look to see if we get a shift or a reversal in the market. I've talked about that diagram plenty of times, before, to where the market, has maybe a inverted left shoulder, a head, and then an inverted right shoulder. So basically it's breaking structure to the upside as it's making higher highs and higher lows, and then we want to see the first area or level of structure to be breaking or taken out as it moves higher. So in this case here, we could see, and I talked about this in a prior video, consolidation taking place here. Now, consolidation basically means where the market is trying to make a decision. Is it going to continue pushing lower and break this area, this low right here, most recent low, and break structure lower, or is it going to consolidate and start breaking structure higher? As you can see here, after it made this low right here, it didn't want to break any lower. It made this low, made a high, and made a higher low right here, and then it started taking out structure to the upside, making higher highs and higher lows. This is an area of structure right here. This is what we would consider to be a minor area of structure, but it's still following suit with the diagram, which will, we can identify as a reversal in the market, okay? Because it's made up, say, inverted head here, inverted left shoulder, and then we start to get these inverted right shoulders to the upside. This is a structural shift in the market. So once we see that, okay, where it's made that pattern and started breaking structure in a reversal pattern to the upside, then you just look for pullbacks to key areas of demand. Now, the thing that stands out and should stand out the most, when I trade this strategy, okay, and what I'm looking for as part of the strategy, number one, I must have a breaker structure, okay. Number two, there must be an imbalance or gap resting back at the zone. That's what that means. An imbalance or the gap is just a small area resting on a candle back to the zone that hasn't been filled in. So if this was, a structure break to the upside here, and this was the little swing that it made to the upside off of this candle here, this bullish candle right here, where the market broke above this bearish candle to the upside, there's a small gap attached to that. That's an imbalance resting at the end zone. At the zone. As long as I have an imbalance resting back at the zone, that makes the zone a high probability area that I'm going to be interested in trading. But first and foremost, you have to understand and follow structure along with price action. We've already made a sign of a reversal coming from the bottom or the lows back to the tops. It pulls back to this key area right here, and once it does that, it taps into this now this is off a higher base chart. Okay, I trade range base chart, so this is off 120 range chart. Once it does that, and I see this beautiful area of demand right here, I'm going to mark that off first on my higher base chart, my 120 range. Then I'm going to move down. This is the latter part, or last part of the strategy. That's the most critical part, because we're looking for confluence, but we're also looking for a better entry point, which is going to allow us to kind of eliminate all that drawdown, get into more of a precise entry point. So when it pulls back here and taps the 120 zone, I'm going down to my 24 range. That's my entry chart, my 24 range chart. That's my entry chart, in which I'm looking for a smaller zone that rests on the inside of the zone here. So it's a smaller 24 range demand zone resting on the inside of this demand zone right here. And here we are. This is the pullback and what it looks like on the 24 range chart. This larger zone is the 120 range demand zone. Okay, it taps into it. I'm looking to see, is there clearly a 24 range zone, okay, demand zone resting on the inside of this zone here? Yes, there is, and we have a small gap attached to that zone as well. When we have an imbalance resting back at both the 120 zone and the 24 range zone, both high probabilities, that is really going to add up and give us the confluence that we really need to look to take a trade going long. At this point here, once we get the rejection, I'm looking for basically the break and close above a candle. And once we get that, the break and close, it could be right here at, say, at 270. Then I'm going to go long, okay? Stop loss is going to go back up below 261, a few points below that, okay? Now, that's a demand setup. Let's take a look at a supply setup right quick. Now, what we can see take place here after it tapped and broke to the upside, okay, it made these highs right here. Again, coming from the top, again, this is where we have, that pattern where the market makes a first approach or sign of reversing in the market. Makes a high and starts to break structure to the downside. Takes out lows here. It's making pullbacks, breaking structure lower. Okay, so what we want to see is the market making this reversal pattern on the higher base chart. When it does that, especially on the higher base chart, and continues to follow suit, breaking structure, making lower lows and lower highs, pulling back, makes a low, lower high, breaking structure, continues to the downside. We're looking for a pullback to a key area of supply. And yes, you have to be patient and wait for these setups to unfold. All right. So on the 7th, which was 2 days ago, there was a beautiful setup right here around 130. Okay. It made a low, lower high, pull back, push lower, broke structure here, and left behind this beautiful area of supply. Okay, resting right here. Now, there was a supply zone here, but you have to think, because people always ask me this question right here. All right, the market broke structure lower. Which area will it reject off of? Of course, it can reject here, but the more logical area to take a trade from is going to be at the upper portion of this leg where the market broke structure to the downside, which would be, it's going to pull back. We got gaps to fill right here. So I would be interested more so taking the trade from here. Now, I'm not saying the market can't reject this area here, forget about this area here, and then push lower. It can definitely do that. But most likely, and what makes more logical sense to take a trade from the point of reference is going to be here. So we mark up this zone. Is it a high probability zone? Yes, we have a gap attached to the zone, meaning an imbalance resting back at the zone to where the market hasn't came back quite yet. All right, after it broke lower here, it didn't come back and fill this area here. It didn't do it until after it broke structure here and then came back and tapped the zone. So mark that zone up on my higher base chart. Now we'll move down to the 24 range chart to finish out the rest of the strategy. So now this is the 120 range supply zone. We're on the 24 range chart now. This is the pullback where it taps the zone. But as you can see, there's no high probability a smaller 24 range zone resting on the inside. So you may be asking, what do I do in a situation like this? Well, what I'll do once we tap the zone on the higher base chart right here, I'll look to see if the market will start to break structure lower. Okay, so showing me where it's, basically it's made this attempt where it's pushing higher right here. So basically we're kind of reversing on the 24 range, lower base or lower time frame chart. But then where it starts to break structure and it turns back around. So where it's starting to break structure back lower. So it taps the 120 range zone. And then it starts to, give me 1 second, guys. Here we go. It starts to break structure lower, pushes lower, breaking structure below these lows here, pulls back, break structure, small structure break below this area here at 21,482 or 483. Then we just look for the pullback to an area of supply. So the first pullback after it started breaking structure below, meaning it broke structure here, made a low, lower high, and then breaking structure again, kind of getting that reversal pattern back to the downside, right, off the 24 range chart. Okay, that's what we want to see. Once it does that and then pulls back to the this little zone right here, okay, we're looking to take an entry going short. Again, it tapped into the 120 range zone, breaking structure here, and then makes a low, pull back, and this is a small breaker structure, pulls back. There is a high probability 24 range supply zone resting right here with an imbalance or gap attached to it. Once we get the first, it depends on if you want to get in aggressive or wait for the break and close of the candle. You can get in here at 21,484 or wait for the break and close below this area here at 478, and then the market just goes down from there. You can see again on the higher base chart right here, what does it do? It starts to come back down, fill the gaps in, and that's what I'm aiming for. Once I get into the trade, I'm aiming on looking back at the higher base chart to see, are there any gaps resting below, and possibly will it run this area of liquidity, this last low that it made right here, and that exactly what it did. For one, why? Because it's pulling back to a key area of demand as well. All right, and then two, when we look at the 24 range chart again, it's starting to show where it's basically coming back down to the downside, showing structural base to the downside, basically reversing from a high, coming back lower. All right, so that's what I'm looking for when it comes to both these demand and supply setups surrounding the strategy. And this is a really full-on breakdown of what I do on a daily basis, right from my own desktop computer, and look for these opportunities. That's all it is. But the key to it is I have to have, first and foremost, got to be able to identify the structure, okay, and to determine the bias of the market as far as do we go long or do we go Then we go short. Secondly, I have to see where the market is breaking structure. Okay, there must be a break of structure, and within that break of structure or swing, there has to be a key area of supply or demand. But you have to be able to understand using both a higher time frame or higher base chart and a lower base chart to be able to do so. But for all those that are really interested in getting the full-on breakdowns of trades, again, there is a link down below to where you can become an elite channel supporter, to where I posted tons of trade breakdowns that I go through and talk about setup after setup after setup in regards to supply and demand, the strategy as a whole, what I was thinking in reference to the setups, where to place your stop loss at, where to place your profit targets at, just breaking trades down, one after another, so that you understand. There's tons of videos packed within that program or membership if you choose to become an elite channel supporter. So the link is down in the description portion of the video, right below the Discord link. Again, if you click on it, make sure to choose the second tier for $6.99 so that you receive, all the video content in reference to those perks and rewards that I'm giving out, okay, or giving back, okay, for you basically supporting my efforts as a content creator and as a trader. But that's all I have today, guys. I want to talk about that. I will be posting today's trade breakdown video to the elite channel supporters sometime today, so be on the lookout for that video for all those that been following the channel who are elite channel supporters. Again, I thank you guys for being such loyal supporters to the channel. But outside of that, that's all I have, guys. If you do me the biggest favor, first and foremost, if you aren't a subscriber, please take the time to go ahead and sub by clicking on the subscribe button and making sure to turn on your post notifications so you don't miss any other uploaded content here on the channel. Outside of that, please make sure to drop a like by clicking the thumbs up button. Before this video ends right now, go ahead and do so right now. Click that thumbs up button. That helps the video content to get out to where it needs to go, to individuals that are searching for the same information or content that you're searching for right now. So please do me the biggest favor if you found value in today's video and click that like button. Take care. I'll see everyone in the next one, and goodbye.